Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. All right, it is official. We have hit bear market territory, which means the stock market is down at least 20% from its most recent all-time high. The last time the stock market was high was like January. And it has been a slow, consistent slide for what feels like the bottom since then. Again, we are down 20%, and unfortunately, it might not be over. Okay, now the thing that we did talk about on Friday is I did say, right, that we were going to get hit with 3 events almost back to back. I did say that. Y'all go back and check the tape. I did say that, okay? So, in fact, we are going to hear from the Federal Reserve this week. That was event number 2. And now we're going to move into earnings season over the next several weeks. That's event number 3. So, it could continue to get worse. Here's the other thing. A bear market, on average, loses about 33%. So, that's out there. We're down 20. Again, that's an average, so it could be better, meaning it's not all going to go all the way down to 33%, or it could be worse, where it goes beyond that. So, just for context, that's something that you may want to know. Now, when it comes to bear markets, I know you don't feel great, okay? Nobody really does. However, you are not alone. This is not the only bear market that's happened in history. This is not even the worst bear market in history, at least as of this moment. Remember, 2020, which was just 2 years ago, the stock market was down more than 30%. And that fell a lot faster. So it didn't take 6 months to happen. It really happened within a span of like 8 weeks, where the stock market just fell to what felt like the bottom back then, down about 30 to 35% almost instantly. Imagine, we've been complaining, right, and worrying about the stock market for a long 6 months, and it is still not as bad as where it was in 2020. Now, in 2020, also, the stock market did recover before the end of the year. We'll see if that's going to be this time around. I didn't think it was going to happen in 2020, and it did. I don't think it's going to happen in 2022. And part of this is the reason why I'm not expecting it or don't need it to happen is based on some of the 5 things I'm going to teach to you today. Now, the other thing about bear markets is this. Bear markets tend to be pretty short. I like to think of them, I'm from Oklahoma, so we get tons of thunderstorms and tornadoes and all that kind of stuff. Unlike a hurricane lasts for a very long time. At least to me, right? It's days of rain and all types of stuff. I'm not here for that, okay? Again, from Oklahoma, we ain't got that much water. And for us, we're more of a thunderstorm type of people, where it's raining really hard, it's a lot of noise, but thunderstorms really don't last long. It's like a hard 12 to 15 minutes, and then it's done. And then the sun is back out and things are back to normal. But it's really violent in the middle of it. And for a bear market, the average time, that's not a guarantee, is 363 days. That's almost a year, okay? And if today is the start of the bear market, then it's going to be about a year on average, okay? That's not a guarantee. That is an average. The other side of this is that a bull market, on average, lasts about 1,742 days. Much longer, which tells me that if a bear market is only this big and a bull market is only this big, this could be an opportunity to set myself up for the future. We know that over time the stock market tends to go up. Therefore, this is temporary. And I think we all know this is temporary. Eventually, inflation will fix itself. Eventually, the supply chain will fix itself, and things will get back to what we are more used to. So in this temporary moment, where the stock market feels like it is crashing, you've got to sit down and decide, what am I going to do and how am I going to respond with my portfolio. So those are things that you want to pay attention to. So let's go ahead and start with the top 5 things that you might want to do right about now if you haven't already. Number 1, don't panic. This is not the only bear market ever. In fact, every investor in history, especially every investor alive, has gone through at least one bear market in their lifetime. If you are above the age of 2, you've been through a bear market. My kids, who are 4 and 1, have been through bear markets now. You can do this. We have been through this before, okay? And remember, in 2020, we had a bear market. We were fine in 2021. 2022, we're in a bear market, and we'll see where this goes after this. I don't have a crystal ball, but the numbers say we're going to be all right in time. Now, is it going to be the end of this year? Is it going to be some point next year? Can't tell you that. Don't know. But everybody's been through a bear market. You're not alone, and it's not the worst one ever. You will be fine if you are taking the rest of these steps. I'll tell you this, and I can guarantee you this. If you panic, you're not going to be okay. Okay? You're not going to be okay if you panic, if you sell, if you do wild things with no rationale except that it was down, I was scared. Don't be scared. It is okay. You're not the only person that's ever gone through this. I'm telling you now, from an advisory perspective, from someone who studies all this stuff and can just look at the history of the stock market, the market has recovered every single time. Now, unfortunately, I wish I could give you a date when this thing was going to be resolved, but that's not the case. Every single time, the market does return. Could be a year, could be 18 months, don't know. Could be longer, right? However, it does come back, and when you invest in quality companies, they're still going to be here. Okay, so keep those things in mind. So number one was don't panic. Number two, dollar cost average. That is putting in a regular amount on a regular schedule. And the reason why, again, if bear markets are relatively short and bull markets are relatively long, it means that these dips, these drops are relatively short. And we don't know when to time it, right? I don't know when the stock market is going to bottom and start to take back off. And because I don't know that, I'm going to continue on public investing every single Friday. My 401k and all the rest of my money, I'll be putting in money every 2 weeks. When I get paid, when I put money in my 401k, and I'm going to stick with it. That process has shown to be one of the most effective ways to invest. Stick with the plan, stick with the schedule. Okay, don't deviate and try and do random and crazy things just because the market is doing random and crazy things. Have a plan, stick with that plan. If you're someone, and we talked about how I kind of do a little bit of dollar cost averaging with value averaging and really just picking my spots and jumping in every week. In fact, I did a members only video and showed you exactly how I chose the 5 stocks that I decided to invest in last week. You can do that, right? Whatever the strategy is, stick with it. If you are buying quality stocks, if you have a good index fund, you are going to be fine. It's just a matter of time before you start to realize that that is the case, before the market corrects itself and moves in what most of us would consider a normal direction. Okay. Number 3 is diversify. Now, I've been saying this, I would say since about February or March of this year, to switch some things around. I have even went back and reviewed a video from earlier this year in January and said, look, a lot of those software companies that weren't profitable might not do well this year. Shopify, they're down 71%. We've talked about Netflix before. Like a lot of like, hey, I'm a software company. I don't know what I'm doing, but I'm also borrowing a whole bunch of money to make ends meet. Those are not the places to be right now. And if you have not, and I've been saying this for a while, I've had lists on defensive stocks at the members only for the top 5 stocks for June, whether it's utility, healthcare. I mean, some people are moving into energy as well, which I did talk about way back in January. The thing is, you need to move to where the market is moving and make sure that your portfolio matches you as an investor and matches what is going on in the market. Software, tech, all that stuff was great in 2020. Those stay-at-home stocks were great back then. Some of them were okay in 2021. That is not the case anymore. People are thinking about recession. People are clearly dealing with a bear market. You have to think and say, what in my portfolio is best suited for inflation? What in my portfolio is best suited for higher interest rates, for a potential recession? All that stuff in your portfolio needs to match that, or at least be very close to it. If it's not, and we're going to do some grade your portfolio videos over the next week or so, that's what I'm going to be looking for. I'm telling you now, if I'm going to be grading your portfolio, your homework, I will be looking for you to be playing some level of defense. It doesn't have to be 100% of your portfolio, but you need to be playing some level of defense. Otherwise, unless your goal is to be uber risky and lose a lot of money, then you want to make sure that your portfolio matches what is going on in the market. We're halfway through the year, right? Y'all gonna see me in the next few weeks start to rotate some things out and start to make those adjustments. It is time. If you haven't, make sure you diversify. If you don't have a good index fund, you should by now. Y'all know my favorite is VTI. That's just one of my favorites. But you need at least one. Okay, you need some index funds, and again, get you something that's solid, get you something that you understand, and that, if possible, is a bonus, pays a dividend too. That's just a bonus, not a requirement, but it is a bonus. That is something that you do want to consider in times like this. Okay, so moving on to number 3, I misnumbered them on my notes. So we talked about dollar cost averaging, told you not to panic, told you to diversify. So move on to number 4 now then, is pay attention to business models. So when I say that, I mean take a look at what the company does. First off, you should never do this. Never invest in something you don't understand. Okay, don't do that. Don't you ever do that. You want to say, I know what this company does. I understand what they do. You don't have to become an expert in that company per se, but you do need to understand the basic economics of what's going on. So if I owned, let's say, an Exxon Mobil, if I owned Oxy Petroleum or something like that, I know why the company's up. It's an oil company. There's a mismatch in supply and demand. Gas prices are high. That's just what the stock does. That makes sense. What you don't want to do is, again, I've already laid out why software companies aren't doing well, why companies that have to borrow a lot of money aren't doing well. You need to say, look, I looked at my portfolio and I know why X company is down by X percent. Understand the business behind the stock. Understand the business behind the chart. And again, make sure that it is making sense for where you are and what you are trying to do. So I'm looking at Coca-Cola. I might be adding that. Maybe I'm looking at Walmart. Am I going to keep Target or not? I'm looking at, okay, yes, Target is down, but what do you do, Target? And how would you fare should we go into recession? How would you do if the market continues to go in this direction? I need to see, what does Target do as a business? Now I know what Target sells, but it's just an example. What does Target sell that is going to help them or hurt them in this year? I'm doing a video for our members only group on Palantir. You asked me to do a breakdown. We're going to do a breakdown on Palantir. I can tell you this from the research that I found as of up to last year, Palantir has never turned a profit since 2003 when they were formed. You never turned a profit and it's been that long and rates are going up, you have to borrow more money. I don't think that's a good sign. Now, I haven't finished my research because I haven't finished that video yet, but if I didn't understand the company, might not have realized that, right? So those are things I want to be concerned about. So this is one of the reasons why I'm okay with investing in Apple, Microsoft, even though they're down. I'm okay with investing in Google, even though they're down. They're all profitable. They've been here for a while. I don't think they're going anywhere. I might not be the same with, I'm throwing out a name, Matterhorn. I may not be the same with Palantir. I may not be the same with DoorDash, Pinterest, Snapchat. Like those two things aren't equal. The business behind it is not the same. So I want to be very careful about what I'm investing in, why, which ones are long-term, which ones are defensive to protect me now. You want to sit down and really figure out, what do these businesses do and what do they mean? Too many people just look at a chart and say, oh, it's up, I just want to invest in that thing. Or, oh, it's down, I just want to get out of that thing. What is behind the chart? Okay, what is behind those profits? And then start to understand those and decide what you want to keep and what you're going to get rid of. So that was number 4. Number 5, the last one, and this is more for advanced investors. Okay, I teach this in my investors toolkit, and we'll talk a little bit about it in our members only group. But put options. Put options are, I don't want to say an option again, but put options are a choice and a tool that you can use to help you make money when the market is down. Again, it is more advanced. I'll go over it in more detail for our members inside the members only group. You want to join that, hit the join now tab. But essentially, what it does is a contract that says you get to sell at a certain price while the stock is falling below that price. So basically, the owner of that contract says, oh, I can sell, and I'm doing this for Target since I had Target today. You can sell Target for $151, even though Target is down to $146. So you get to make the difference, because I get to sell high, and whoever loses, right? Or I can buy a whole bunch of Target at $145, buy it at $146, wherever the price is, and sell it at $151. So I'm almost locking in a portion of my profits. Or if I just own the contract, the value of my contract increases the further the stock goes down. So for example, for me, I bought a put option contract maybe last week that said basically by the end of July, if Target is below 151, the contract was going to be valuable. Well, Target took a tumble today. And I invested just $1,000. I invested $1,000, made $200, $210 to be exact, like that this morning. I'll take that, right? And I can do a put option contract on any stock that's out there. And if it's a stock that isn't doing well, I get to get my little put option contract, and the stock falls, I make money. Now, that is the simple version of this. Now, put option contracts can be volatile. It can be a little bit dangerous, which is why I'm recommending it for advanced investors. Okay, I'm not just everybody go get put option contracts. I'm not saying that at all. Okay, and they're very volatile. The day I bought that put option contract, when Target went up, remember they had announced, we did a video, the day I did that video about Target and how it fell like 7 or 8%, actually lost $500 on day one. I said, hey, I am not going to panic, which is the first thing I talked about today. I'm going to hold on to it. I definitely think Target is going to be below $151 by the time that this option contract expires. So lost a lot of money on paper, held on to it. It fluctuated, and then went up significantly on Friday. And then I took my profit, which was my goal, at $210. I walked away. Okay, so again, for advanced investors, for those who are in the membership group, let me know. I can do an entire breakdown on that. But that is your more advanced option. So for all of us, there are 4 and then 5 with an asterisk if you are more advanced and you're into slightly riskier investments, but a way to make profit on the downside. So let's recap all 5 of these real quick. First one is don't panic. You are not the only one who's in this bear market alone. Okay, I'm in it too. Right? All of us here are in it. There's nobody who has never gone through a bear market who has been investing. Okay, my own kids have gone through at least one bear market in their lifetime. And in fact, my son, who is 4, has been through 2 now. So he went through one in 2020. His sister wasn't born yet, and he's going through one now. And now his sister is going through one, and she's only, y'all see her in the beginning of the video, she's so sweet. But now she has bear market experience. Okay, so you're not the only one, but time is going to help us all. So don't panic. Dollar cost average, talked about that before. Diversify, if you have not already. We're going to talk a lot more about that over the next few weeks. Pay attention to the business model. Understand what you're investing and make sure that matches for where the market is going. And then lastly, if you are more advanced, check out put options. It might be an opportunity for you. All right, those are 5 things you need to do in a bear market, things that you should consider in a bear market. If you have any questions, thoughts, or concerns, feel free to let me know in the comments below. And if you are interested in more exclusive content, feel free to join the members only videos. We do at least one exclusive video every single week. It's like $2 a video, $10 a month. You guys get it. All right, that's it for me. I'll talk to you later. Bye.